Well, joining us with his analysis of trade at midday is Muhammed Wagley from Sasfin Wealth. Muhammed, hi, good to chat to you once again. Gosh, the JSE, it's not a pretty picture today, is it?
Not at all, Ray. It's a bit of a bloodbath, if I'm going to be honest. But I think you hit the nail on the head. All those sort of losses are focused in that Resi 10, down near double digits. I don't think I've seen that before. And I think a lot of that is predicated on what you mentioned, President Trump's rumored appointment of Mr. Walsh, who is quite hawkish. I think that sort of gave credence to the sort of rebound in the dollar that we've seen. And I think those things sort of together led to quite a bit of profit taking that we're seeing in the gold and platinum space. I think for the time being, this does look a little bit more of a short-term sell-off than something that's structural per se. You also made reference to the Impala numbers. I didn't think those were too bad, but this is one you've got to watch closely. I think if this, sustains, it could be a decent entry point, but you've got to wait and watch. If it keeps falling, you don't want to be in it.
Yeah, you don't want to be in it. And this is the thing, when we have these massive sort of surges like that, what comes up does sometimes come down as well. Investors weighing in on the Fed rate decision as well. Look, that was expected. I think IMPC was also expected as well. This is all factored in, I would think.
Yeah, I'd say so. I think probably what happened yesterday with our MPC was a bit more of a surprise. But the Federal Reserve over in America, I think it was pretty nailed on that we wouldn't get a change. It was quite bare on information. I think people were looking for a bit of a hint or a bit of guidance as to what might happen next. We did get a bit of movement in that respect. You mentioned Mr. Walsh being nominated, or I suppose at this moment in time it's still rumored, but that looks very likely. A little bit sort of disappointed though when I look onshore. I think we could have been a little bit bolder and gone for the cut, but I think they are looking very closely at inflation expectations, and perhaps those didn't come down as far as the Reserve Bank was hoping. I did think there was a little bit of leeway for it and was a bit disappointed, but it's not a train smash at the end of the day. I think we'll still get 2 cuts this year. So the timing of it, I suppose, will be a little bit later than we were expecting.
Well, if you look at the US Fed as well, and if Mr. Walsh is indeed put into that position, their whole thing is to bring down their interest rates. They really want to bring them down. So that's going to affect the world. Something else that's been affected is gold, also slumping a little bit today as well. And of course, affecting those gold miners.
Yeah, absolutely. Huge movements pretty much across the board. You did allude to it earlier, but we've seen sort of more concentrated losses in the gold miners. Again, I think, you hit the nail on the head. What goes up often enough will come down. And, gold has been at heady levels for the longest time. We're still at about $5,100 an ounce, there or thereabout. We had hit all-time highs earlier in the week of 5,400. So I don't think that there's necessarily been a fundamental shift. If you look at sort of macro information that's been out over the past week, or even sort of policy news in the past week, there hasn't been sort of enough of a change to justify sort of sustained movement in this regard. So it does look like a case of, lots of investors taking profits on, what must be quite handsome returns on these gold positions.
No, absolutely. Right, let's chat about Orion. You heard them in our news bulletin. What's your take?
So it's an interesting one. Now, this company is very much in a state of flux. They are moving from sort of an explorer to a base metals producer. And essentially, when looking at these results, we're looking on feedback in terms of, how that's going, how that's developing, how it's progressing. And in that respect, they look like they're making quite a bit of operational progress, but we didn't get sort of, I guess, a finalization that we were looking for. I think the big thing is probably, Glencore is still financing it, or there is detail there, but, it's not binding yet. It hasn't really sort of been completed in that sense. And I think that little difference does actually go a long way. And then I think also the market's a little bit nervous in the sense that we think it might take a little bit longer than was initially factored in. And I think all of that served to put a bit of pressure on the share price on the day. But I do think it's also a function of, today was not the best day to report on anything, if I was being completely honest. I didn't think there was really too much news to read into in respect of Orion's report here, but we did see quite a bit of selling. And I think, the day actually factors into that as well.
Yeah, a bit of a Black Friday, put it that way, because you can see down 9% there, but it's not a reflection at all. Gemfields as well, also making news headlines.
Yeah, I think not too dissimilar from this. Gemfields sort of were reporting on the second plant that they were opening up in Mozambique. I think it was a ruby plant. The view was always that, come Feb 2026, this would be very much operational. What they've come out and said is that it's actually imminent, but that is not the same, and I think sort of when it comes to questions of timing, the market can, or investors tend to be quite cynical about that. I think the expectation is on our end that there'll probably be a few more delays. And again, the share lost substantially. I don't think it was as bad as Orion, but also down on the day. Again, I don't think there was too much negative information in that respect, but by virtue of reporting on a really down day, I think investors got a bit spooked. But if I were to look into it, into the minutiae of it, I didn't think it was bad.
What do you do in a situation like this? Because you have this new guy who looks like he's coming. He was in the White House yesterday. He had been overlooked by Trump once before, so it's not a given deal. But if he does come along, do you sell? Do you take your gold shares and go, wait, hold on, the party's over because this guy's coming along? You already see the Rand is at 16. It's such a difficult situation.
It is. But there's one thing I'll point to. People forget that Jerome Powell was actually nominated by President Trump back in 2016. And, it's been a huge sort of talking point for him that the Federal Reserve has to maintain its political independence. I understand sort of the level of cynicism that we're seeing just in relation to Mr. Walsh. He was at the White House yesterday, and I think there is this idea or this narrative that, he's going to cut rates sort of independent of what the data says. I'll just point to, Jerome Powell not doing that, and of course, I think he wasn't as overtly hawkish as Mr. Walsh is known to be. But I think relative to some of the other candidates, this is probably more of a moderate higher than one might have been expecting from President Trump. It remains to be seen. I think he comes in around May sometime. We'll get more clarity once the first sort of meeting, FOMC meeting happens after he's in office. My gut is telling me that it's not necessarily as bad as people are making it out to be. Perhaps we shouldn't be this cynical. Give him a chance.
Hold on till Monday. Hold on to Monday. Right. Now, before we move on to your stock pick, let's take a moment to touch on which counters your industry peers are watching closely.
I'm going with PSG Financial Services. I did pick it probably just over a year ago. It's really, it's a perfect environment for business like that. You've got obviously a high quality management. This has been one of the best compounders over the last 10 years. You've got a rising markets, so the actual fee base is growing. There's a bit of a wealth effect. People are going to come to them for advice. A lot of uncertainty, a lot of geopolitical risk. People want an advisor. They want someone to talk to. So I think this business is just going to continue going from strength to strength. They're an aggregator of independent financial advisors, rolling them up into their business, and they're driving growth through that. Plus some of the other, they're an asset manager and they sell insurance. So great business, one of the most sort of under the radar, high quality stocks in SA. And I think SA is the place to be this year. So that's my stock pick.
So my pick is Investec Bank. So Investec, there's essentially 5 distinct businesses within the group. There's a South African bank, there's a UK bank, an SA wealth manager, UK wealth manager, and then they've got a stake, 10% stake in the 91 asset management business. So a bit of a combination. We've got a positive view broadly towards the SA banking sector, just given lower interest rates are more conducive to lower credit losses and higher lending within the system. And I think broadly banks should trade well operationally. Investec has been a big laggard within the SA space, despite banking sector trading well in South Africa. UK banks are up kind of north of 50% last year. Wealth management businesses in the UK have also done extremely well. Investec have got a stake in Rathbones, which is also up significantly. 91, I think, was up also 50% the second half of last year. So a lot of tailwinds to the parts of Investec, but the actual Investec shares lag quite significantly. We think, operationally, it's a very well-placed business, very high capital levels within the business, and a large buyback program.
Right, so there you have it. Let's start with Investec. We've heard all the banks so far. It's been a parade of the banks, but now Investec, of course.
Yeah, lots of love for financial services. It doesn't necessarily surprise me. I think I got to agree with, a lot of the logic that was underpinning this decision. I think Investec in particular probably has underperformed the rest of the sector in that sense. But when you look at sort of the diversity of the business, they've got a good sort of asset management wing. He mentioned 91, they're doing phenomenally well. They've got geographic diversification. I think you mentioned Rathbone as well. I think that's over in the UK. So yeah, I think they are well positioned, and I think they are coming off lower bases than some of the other banks. If we do see that momentum come through in the sector, I do think they should benefit disproportionately. And then I think the other one was PSG.
Yep.
I really like this one. I think it's still attractive. I do like it for the long term. You've got a massive asset manager exposure with some insurance as well. So really long-term exposure there. They're in the right places and have been growing consistently. I quite like PSG.
Yeah, me as well. PSG is strong. Right, your stock pick for this, what I call Black Friday.
Yeah, so I think this also ties into that. We got results from Microsoft last night, and I think there was quite a bit of disappointment just in relation to the revenue or the growth rather, that they got from their cloud services. Now, the expectation was growth for 39.4%, and the number actually came in at 39%. And then we got an incredibly disproportionate sort of fall in the share price, lost about 10% on that. And I think, if I was to be sort of less cynical about that, I think investors are looking at this and thinking, look, if you had sort of allocated less resources in-house and perhaps more to data centers, we'd have seen, that number tick up, perhaps beat expectations. So there's a little bit of disappointment in respect to that. But I think expectations going into this were probably disproportionately high. I think there's an incredibly high quality company, and I think people are sort of losing sight of that. This is still absolutely one of the best companies in the world, and still remaining sort of at the forefront here with data infrastructure and cloud services. So I think it's actually a decent entry level to get some Microsoft.
There we go. That's good advice for Microsoft. Muhammad, thank you so much. Good to chat to you on this Friday. Good to have you on the show today. Thank you. That was Muhammed Wagley from Sasfin Wealth.